Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and this is Friday night video, June 13th. It's coming out a little bit late, but we'll get it to you. Okay, kickback rally. It felt pretty decent, spurred on by news, which those kind of rallies never really last once you know the reason why people are running them up like that. But it was my take on it. It was a reaction, a knee-jerk reaction to some inflation numbers apparently that came out that were not as bad as Mr. Bernanke led us to believe a few days ago when he knocked the market down about 400 points with his comment. And now the news finally comes out and it's not quite as bad as he made it sound. Once again, Mr. Bernanke is right on the mark. Good job. Anyway, the rally doesn't change the picture at all. We'll take a look at that in our final segment. And I've got another idea. It's on the short side, and it's Mylan Labs, MYL. So in just a moment, we'll take a look at the chart, and I'll show you exactly how to take this idea and turn it into some money. Now don't go away, I'll be right back. Okay, we are looking at a daily bar chart of Mylan Labs, MYL. And I'm zoomed out, as I always do, to give you a good bird's eye view of what we're looking at, the entire picture, and then I'll zoom in a minute, because there's a few things I need to show you from this angle. Okay, first is a call on the short side, and we're going to be looking to sell the stock short somewhere around $12.60. It's just about where it closed. Now, it could rally back up into the $12.90 area. It may not, though. But if it did, it would be just a good opportunity. If you wait for that to happen, you may miss the play completely. So you have to figure out what kind of risk you want to take, whether you want to put it out right here or try and see what the rally, if they're going to get a rally. Anyway, my target on the downside is $10.30, right down here. And a couple things I want to show you. I'm calling this the reverse of the breakout pullback go. This is the same concept, only in reverse. It was the same concept I used when I called the short call on Apple. Remember, I called it the reverse of a breakout pullback go. Well, this is the same scenario. I'm going to point it out to you. First of all, this resistance line is key. Okay, you can see this is the old high where it rallied back up into it, pulled back, rallied up to it again, pulled back even deeper, rallied back up into it again, and now it's got this rolling over look to it. And I think it's going to come right on back down to the old low, because the conditions of the overall market. We're in a downtrend, so this just makes sense that it's going to pull back to support. And it'd probably be a great buy down there. But right now, we're looking at it as a short play. Okay, I'm going to zoom in just a little bit, give you some details. I'm going to remove this resistance line, because you know what it is now. And here's my breakout pullback go. This is the top pattern right here. This pattern right here. This was the initial breakdown, or breakout if you want to call it. This was your kickback into resistance, and then it made another low. Now Friday's action was just either a small kickback, and it may just do this for another day or two. It may try to get back up here to this 1290 area, or it just may, start right down again. But the big picture here is definitely, it looks for lower prices here. So I've got to leave it up to you as to where you want to get the short off, but the picture definitely looks down. Now, this is the breakdown, kickback, and go scenario. Let me recap this. This is Mylan Labs, MYL. It's a call on the short side. And I think we can make about $2.30 on this trade. Okay, didn't buy or sell anything, so I have nothing to show you in a win and a loser category. So let's go right to the major indexes, because I want to show you a few things. Some of you may say, aha, the theory is in jeopardy of the resistance because it looked like it might have gone through. Well, once again, I say the picture hasn't changed. You always have to give these charts a little bit of wiggle room. And this is the Dow we're looking at, okay? I did say that this was the first resistance here, and it may not get through that, but it has. So then we're looking at this resistance. But once it goes through, it still does not change the picture. And the reason why sometimes these close resistance areas don't work right away is because the index or the stock, if we're talking about a stock, never gets far enough down below it, like down into here, and then the kickback, this would stop it. So we're dealing with this resistance here. This definitely got low enough below this resistance for this to stop it coming back up. And as I said in my last post on Friday, every index on my short-term indicator is overbought. They're right at the top. They may stay there for a few more hours, but they have to come back down eventually. Okay, so that's the Dow. Let's take a look at the transports. This is the old breakdown resistance price. You see, it got to it, but it didn't close above it. But don't be surprised if it does, because this scenario fits for this also. If this had broken down to here before it rallied, this clearly would stop it. But because it never got really far enough below the resistance, we're going to go to this resistance area. This is what makes sense. This resistance right here. Like I said, if it had gotten down to here and then came back, this would stop it. Now the next time down, when it gets down into here and comes back up, this will stop it. So sometimes when they don't get far enough below that key area, sometimes they'll kick back up through it just a little bit. So I just don't want you to think that the theory just gets thrown out the window because they come back up through what we thought was resistance. Okay, let's going to take a look at the SPYs. Similar pattern here. Came a little bit higher. The real main resistance here is right there. And they could get up into there without the picture changing one bit. Remember, it's all about the picture, not the market rallies an extra 40 or 50 points. Here are the QQQs. Same scenario as the transports. As a matter of fact, this chart looks so much like the transports, it's very interesting. Okay, once again, because it didn't get far enough down below the original support, now resistance area, okay, that it's not going to stop it first time. So we've got to go to our next resistance area, which is the bottom of this right here. So they could get up into here tomorrow, Monday, and they may stop right here. But that's what happens with when support becomes resistance. If the break isn't big enough down into here, and it's only a little bit below, sometimes they come back up through it just a little bit to their next resistance area. Like there are just layers of resistance areas here. And even if it were to get through that, this is a big resistance area. I don't foresee it up there, but you never know. But you got to be prepared for whatever that comes your way. What's important to know, is at least the way I see things, is that the pattern is going down. These little kickback rallies along the way are part of the process. Just like the little pullbacks in an upgoing market is part of the process, the kickback rallies. And they can be convincing at times, but probably Monday morning, everyone will turn seller again because Mr. Bernanke may come out and say something else. Anyway, that's my take on the market. That's my view. Until Monday, this is TK signing off.